Rizzo, I don't mean to jump in, but I'm not sure if you're looking at the chat that's inside this stage. There's a lot of people asking questions.
Yeah, shoot. Okay.
I just pinged you.
Yeah, I see it. DOM and footprint. I don't really use the DOM. I have it up and I'll observe it. I'm not and I'll take little key tidbits away from it, but I don't really get in a trade or get out of a trade just because I see, just because I'm looking at just the DOM. But anyway, like auction market theory, the key is, given a profile, we're not always going to be perfectly balanced, but is over a long enough period of time, you end up with a mean. You end up with a range as to where buyers and sellers are willing to do business. So at fair value, this is, technically speaking, I'm not talking about like fair value gap or whatever, just fair value, just basic econ. This is where most of your buyers and sellers are willing to do business, and that's typically what we call our value area, right? 70% of the distribution. Once you start to get to the lower end, or let's say discount, sure, we have buyers willing to get involved, but at this low of prices, you have literally no one willing to sell to you down here. Same thing up here. You have no more new buyers willing to step in at high prices, right? Sure, I guess you'll have some sellers up here, but all in all, this is where most of them are willing to do business. So that's sort of why, when given a distribution like this, this is where I'm expecting buyers to come in, and this is where you're expecting sellers to come in. And obviously, it's not going to be like just as simple as shorting this, longing this, shorting this, longing this, because otherwise markets would trade sideways for eternity. And you're just going to have like undershoots, overshoots, whatever, right? But even then, you have still essentially looking at the same level, right? Or at least I am, in terms of, okay, can buyers reclaim this? If so, let's get back long and take it back to the opposite end. And so whenever I'm doing like my outlooks, or whenever I'm looking at a range, I'm going into the session, I'm telling myself, okay, this is the range. I'm going to treat this range as sideways until otherwise. So unless I see some initiative activity like outside of value, no point in me initiating new longs as we sort of approach this upper end, right? And same thing with the downside. Like, no point in me like really pressing into new shorts down into this. Like, sure, once we like start to breach it, and start to see sort of what I want to see, then maybe we can press shorts and go look for value elsewhere. But the main takeaway is sideways until otherwise. And then when you do break away from value, like all we really do is trade back to prior value. So, yeah, so you have a profile here, profile there. Breaking away from value on this one. It's like, where's the next place to go? Prior value. So this is sort of just how I see markets. It makes it really, really easy for me to, look at a profile. Look at a profile, look at a couple profiles, and come into the next session saying, okay, these are sort of the outcomes that I see possible or plausible. Is it always going to happen the way you want it to? No, but having those in mind, it allows me to stay patient and sort of look for the opportunities that I'm looking for. So it's not. I know a lot of people say like, don't try to predict the market. I'm doing all the predicting beforehand, and then going into the session, waiting for those levels to sort of trade, and then, I guess playing my odds there. So let's answer a couple questions. Only use the market profile or the volume profile too. For levels, I'm mostly using the volume profile. And the way I usually go about it is, this is the bigger pair. Let me get my pen up so I can draw on this. I'm usually looking at the bigger picture first, which is the composite, right? And basically telling myself, I'll do this on NQ because I think it's a little easier. No, we can do it here. I'm basically telling myself, on the big time frame, this is basically your one main distribution down here. Right, and then I guess within this, you could say you have a couple smaller balances, right? So the main idea comes off of this, meaning, okay, I'm basically thinking of this as the upper end, this as the lower end, expecting sideways within this until otherwise. And then also going into these and saying, okay, though this is the bigger picture, I can also use some of these levels to sort of see this bigger picture idea play out, or look to base my overall thesis on the big picture. So basically top down, a lot of people call it as.
I got a question.
Mm-hmm.
What would you say your average stop loss size is? Do you have a set stop loss around like 60 ticks?
Yes,
Something
it's
like
about 4 to 6 points.
Okay. Is this on ES or NQ?
ES. NQ, it's
I see.
usually about 20, at least 20. Sometimes if the intraday range is small enough, it'll be like 15, 10.
Okay. Yeah, I see.
But,
Do you have a set stop loss, or do you trail aggressively? Do you have a dynamic stop? Anything like that? Anything fancy?
I have a dynamic stop. I'm like completely discretionary when it comes to that. I know
Okay.
it makes it tough for people to like sort of understand.
No, I agree with you. For the most part, everyone should have a dynamic stop, unless you're like doing some very statistical type of trading, like a specific model where like you like it's back tested proven. But
Mhm.
I agree with you. Dynamics is probably the best.
Yeah, if I'm
have
reacting,
Oh no, go ahead.
if I'm reacting to something, let's say like a footprint or something, and then like getting in thereafter, obviously my entry is going to be a little worse than I guess the level itself. Then in those situations, I'll usually like risk a stop at the last low.
Have you experimented with a parabolic stop?
That's a parabolic stop.
I would need to draw it out to explain it fully, if you don't mind.
Yeah, go for it.
Okay, well, I can't share my screen.
You explain to me like the basic.
It's like every single tick price moves against you or for you, your stop loss is going to move up a single tick. So if price moves down against you 20 ticks, your stop loss is also going to move up towards your entry 20 ticks. So the idea is that you're really good at catching trends if you it's really good at catching trends.
Oh, okay. That's like a trailing, or a different type of a trailing.
It is,
An
but I would say it's
auto-trailing, rather.
better. Yeah, I would say it's better than a trailing stop.
Mhm.
It's interesting. A lot of quants, a lot of algos use it. So I was just thinking if you did.
What is your main confirmation? I don't use confirmation really. So I'm a lot of the time I'm limiting into places, meaning I just wait at prices as we pull back to them, and I primarily play only the long side, by the way. for those that didn't know. Reason being, if we'll go back to that example again. I'm only looking for one setup, or I guess a couple setups during the day. And if you're looking for both, right? Like let's say price is coming back to prior value, right? All right, so one of my trade opportunities, I can be long here. I'd like to play the bounce back up to value, let's say up here. Or, if you're downside, you trade back into value and you can be short for ideally the traversal of said value, right? Not saying that there are like too many instances in which like you like absolutely like just completely chop at a level. In some sessions, like there just are. It helps me avoid just flip-flopping back long and short, long and short, long and short, and just taking haircuts there. So I like to just go into the session looking at.
Someone wants me to ask you, how do you draw your zones? Like from what time? I think specifically he said like from market open to 9:30, or do you look at previous day? Like outside of, yeah. Where do you draw your volume profiles? Like what times?
I guess that applies more so for trading view, huh? Because like you're like manually drawing your own. Usually I'm just going on a session by session basis, so I also
figured.
don't include ETH. I don't think it's too relevant.
Do you ever look at anything more than like a week prior?
Yeah, of course. As long as there's things to the left of me to look at, I'm looking at it.
That's generally what I did when I was using volume profile. I used to be big on volume profile. I never really got into TPO. It's interesting.
Basically the same thing.
Yeah.
Yeah. So as long as there's things to the left of me, I'm sort of, my main thesis is coming off the composite volume profile.
I got you.
And obviously, like if you're using trading view, it's like, yeah, as long as there's shit to the left of where you're currently trading, like just include it. I mean, like let's say we're trading this range, like you want everything in the past here. And I know some people like to use strictly like a weekly profile and then like look at, let's say, last week's value area high, this week's value area low, or like this month's value area high, value area low, or whatever it might be. It might work. It's just I've preferred strictly working off of levels. That just makes sense. A little more sense to me.
What setups do you look for most?
My favorite's got to be the look below and fail.
Over and
a failed auction.
Failed auction.
Yeah, because those tend to move the quickest. Right.
Okay.
Obviously, you can play to the upside or downside.
Do you use over and under?
Is that what it's called?
Yeah.
Yeah. Like on Friday, we had a look below and fail of the inside day, the prior inside day. Right. So you had an inside day here. I might label it IDH and ID low. But yeah, overnight session got a look below this. Traded back into 120s. I got long the 130s and then added to my longs back up of 180s. Caught a nice long back up too. Final take profit was up here, but yeah.
Hey bro, can I ask you a quick question?
Mm-hmm.
How you combine volume profile with market profile? Like how do you combine these levels together?
I'm prioritizing the volume profile.
Okay, so you don't combine them together, or like you just put your trust on volume more than TPO?
More so volume.
Okay.
Right, like there are certain days where I'll see, let's say, a shelf, and then the value area high also is like a couple ticks away, or let's say like 3 points away on ES. Then on a session like that, like I might make it a zone. Like sort of like here, on ES. Right, you got like the last shelf there. There's your 2-day value area high. You also have like this high volume node on the composite. So some days I'll look at both, sort of make it a
Thanks, brother. Thanks
little
for
bit of a
answering.
zone. And then TPO, like the only levels I'll strictly use from only a TPO are single prints, right? Single prints, excess, and specifically the spike base. That's like strictly TPO levels. How do I know if price after? Okay, I don't use book map or heat map, but earlier. I have a question. Do you know if price? How do you know if price after a strong move will respect the value area high, value area low point? You don't know until it gets there. The expectation, right, or expected, or what's the verbiage that fucking auction market theory uses? Responsive. The responsive activity is to be short value area high, long value area low, right? But you did that every session, like you see markets trade sideways for eternity. So it's when you sort of have to flip and say, okay, we're leaving this balance, this distribution, and going elsewhere. Is this order flow the hidden? What does that mean? How important is IB? I don't think IB is too important. In terms of like opening ranges, I prefer using the 5-minute. It's just a lot better. The 5-minute,
How long would you say you're in trades?
Quite a while. I'm trying
What's
to
that mean?
position myself intraday. So
Like 30 minutes, an hour, 2 hours? Can you give me an average?
I was looking at my stats the other day on Sierra or on with AMP. My average gets skewed because I had a couple swing trades that went like a week long.
I see.
So I couldn't tell you like my true average, but I would think at least 15 minutes.
Oh, I gotcha.
Yeah, to me, IB is not too important. Like, sure, I'll see the IB forming, or I'll see it formed, and then like have those levels. I'll know where those levels are, the IB high and the IB low. But I'd much rather. I prefer looking at the 5-minute opening range, right? Though I have it labeled here ORH and ORL. It's these sort of solid lines here, and then also have the mid of that. I like using that too. You get some decent reactions at the midpoint of the 5-minute opening range. So, right, like pretty decent reactions. Entry trigger. I usually don't have one unless I'm waiting for confirmation. In which case, I'm looking at a footprint. So most of the time, I'm limiting into positions. Like, so, I'm essentially guessing as to where we're going to react with relatively tight stops. So, let's say like we're coming back. Let's say you break the opening range high, right? Or let's say you break the 5-minute opening range high. You've also got a level there. I'm just gonna be limit long there. Right? I'm not gonna wait for confirmation. I'm not gonna get order flow.
Someone was asking you, why do you have your candlesticks like that? How does it help you?
Like this? No, it doesn't. It just makes it a little easier on the eyes as opposed to,
I see.
I don't know, like what else? I guess you could use the candle bars, but I used to, but it's just
And someone else is wanting me to ask you, do you use weekly or monthly VP?
No, I don't.
What do you think
I
about
just use overlapping.
By the way,
or
guys,
just
if
balances.
if you want to ask something but you don't want to speak, just PM me. I'll ask them.
Yeah, I know some people will split it up or make composites based off of time. Let's say a weekly or a monthly. I know some people like that, or some people like using, I guess, the value area high, value area low of that, and I think it works to a degree. I haven't really tested it out in a while. I used to do that, but I just found it easier to just make composites based off of balances, overlapping volume or overlapping value, and doing it that way.
Have you ever used footprint for levels for intraday?
For levels, no.
No. Okay.
No. I mean, I'll see an imbalance. I'll see an imbalance and sort of, as soon as we get it, I want to see price hold it on any kind of retest of it. But I'm not like plotting out let's say an imbalance. Fucking out there here. I'm not like plotting out a little imbalance and then strictly trading off that. I think you can. It's possible, but the bigger picture idea is still from the overarching narrative and
Someone was wanting me to ask you, how do I know if price actually accepts into prior value?
I mean, you never know for certain, right? But
that's what I was going to say.
The only things we do know are where most of your value sits and where you can sort of expect, I guess, the reaction to come in.
I personally want to ask you, like, I never really got big into TPO. I was mainly just VP. What is the biggest advantage with the TPO? Because it just shows you where price has been, correct?
Yeah.
I mean, is there anything specific that you
An
look at a
advantage in
TPO?
TPO? No. I think volume profiles
Gotcha.
a lot better.
Because
Yeah, like for instance,
good.
Go for it. I was going to talk about acceptance.
No, I was just going to say, specifically, I see a lot of people using TPO, and I just couldn't understand why it was so popular.
Just TPO is a little tough.
I gotcha.
But for example, like in terms of acceptance, this one here was a clear one. So you know up here in this, we had this like 3-day balance up here at the, I guess, all-time high. So you have value, or you balanced here for 3 sessions. You broke away from it, right? On NQ you did. On ES, I think it stayed relatively strong for another day. But either way, you're shifting value lower. Right? There's bulk of your value there. Next session establishes value a little lower. On NQ, you completely, break away from value, and then the next session goes even lower, right? So once you start doing that, you end the one time framing up on the daily. You put the weekly. Oh, actually, you don't put the weekly in a balance yet, but you completely shift value away from where you had for the last 3 sessions. You start to see a lack in excess at the lows. So looking at a profile like this, like if we're getting any kind of failure up against the 750s on NQ in this example, like you want to be short. Even I shorted on this session just because of how well value shifted lower. And then even on the intraday chart, right? Like you can be bid here up against these like 750s, or even if you had a level to 730s. Like I wouldn't blame you, but eventually another test of it's bound to break. You're making this level weaker and weaker and weaker each time you test it. So don't get me wrong, like I was long that night up against these 750s, right? Like one more attempt at it. Like once this failed pre-market, I was like, yeah, no, this is just gonna fucking fail. So it's just one of those things. Like I guess it's sort of a feel thing too. If we're not looking at, I guess like a footprint and really trying to confirm whether buyers are actually stepping in. A lot of it is a feel thing. I will say that. So, if you're completely new to markets, it's going to be really, really tough. Oh my God, there's so many questions.
Yo, someone asked if you use strong levels as pivots for. Yeah, if you use strong levels for pivots, I don't know.
Yeah. So sometimes, well, I'm basically going into the session. Let's say this is the overarching idea, at least let's say with this range, right? Acceptance into this takes you to this, failure up here takes you down to this, and sideways within this until otherwise. But you also have, let's say, this we can watch. You got a shelf here, you got a shelf there. So you can have that area marked off as a level. You can have this one within this marked off as a level to work with. And I think you got decent reactions off of both of them on that day. I think it was, what, right there, like this 70 to 72 zone. Maybe not that one, but this 80 zone, you sort of start to see some buys come in. So yeah, I do have levels within zones, within balances that I am looking at for, I guess, guidance or even places to execute.
What's your opinion on delta volume profile?
I had it, but I found no value in it. I think I still have it. Do I still have it? No, it's on this one. Like something like this. Wait till it loads like that.
Let me see.
Yeah, I found no value in it. What are my overlapping volume profile timeframes? This one's a year to date. So this one's 2025. And this one goes back like 2-3 years. It's not necessary now because you don't have stuff all the way that far back. But like, let's say we start trading into, I'm just going to go to here. Let's say we start trading back here. I'm going to need a profile that goes back at least 2 years, right? That covers this range as well. Or even stuff down here. So when we traded down into here earlier this year in April, I had a profile that went back all the way here. I mean, yeah, the answer everyone wants to, or the question and answer everyone wants to know is like, what is acceptance? Like, we never know, right? All I know is where can I get in to manage my risk the best? So, my win rate's not good. It's like 50%. It's like smack dab at 50%. Right? It's just my profit factors is 2. Learning DOM and volume profile, right? I'd say volume profile. I'd say get the levels down. And the ideas, like, I can look at a profile and know exactly where I want to see reactions and where that reaction should take us to. So in essence, I'm trying to predict where the market's going to go, plotting out those levels.
What would you say your average risk to reward is?
My profit factor over this year has been 2.
Hmm?
But I do scale out of positions. Like, I'm not going into a trade saying, okay, this is a 2R or a 3R. I mean, like, obviously, like, before I get into trade, I know my ideal target. Like this long from on NQ on Friday, down in the 130s. Like, my main targets, first off, this 260s, and then ultimate target would be the prior day high, right? Just a complete traversal of the inside day.
Someone wants me to ask you, are there any signatures you have seen as a pattern on footprint or DOM that give you a better edge on an entry once a level is met?
I have one. If looking at a footprint, maybe it's better on a tick or a range chart. It's basically I call it like a delta flip. But like, let's say, where do we have heavy negative and positive delta? Okay, start to get some here. You don't really get it here, but the idea is you see lots of selling into a level. You see somewhat of an exhausted low, right? Or at least a complete auction at the low. And you're buying on the break of that candle high on good delta. Right? Like, this one didn't give us great delta back up. So, like, I guess it wouldn't meet the all of the entry criteria, but that's the idea, is heavy negative delta into a level. And then a quick thrust back up, right? And then 3 stop at the low of that candle.
I'm going to ask you, how do you perceive value with delta? Because with the bid and the ask, it could be passive buyers or it could be like aggressive buyers. So when you're looking at the delta, you can't always distinguish between,
No.
hey, am I looking at limit orders or am I looking at aggressive orders trying to aggressively push price up? So I found a lot that stuff with like a delta volume profile or like just delta in general isn't too useful to me. But I'm just curious, like, how do you perceive delta, knowing that you can't always tell the difference between the two from aggressive and passive?
It's hard to tell the instance it comes in.
Yeah, I mean, mostly I'm looking for reactions, but if I'm just taking like the face value of delta, like a delta flip, for example, I think it's like there's so much more context that needs to be said for a delta flip to be anything more than just a number going up. But I'm just curious if you have an opinion.
It's a lot of context. Like, you on session, on, like, let's say, like this session specifically, there was a boatload of I don't remember off the top of my head how much negative delta there was at the lows, We tested these lows like 4 or 5 times during the session, right? These like 750, 740s. So I was gonna break it. Let me see if there's actually negative delta there. A decent bit.
I see.
But like the buy reaction is not necessarily sure during that session it is, but then overnight you're testing it again. You're only getting like 20, 30 point pops off of it. You're never really going anywhere new. Eventually you just like you break through it. It's the fourth or this goes for when I limit long as well. I will never limit long the same level for 3 times. 2 times I might, but a third time I won't. The idea there is each time you test a level, it gets weaker and weaker.
Yeah, I mean it's like a hammer hitting glass. Eventually, it's going to break through.
No, my RR is not 2. Profit factor is 2. It's different. I mean, I'll put my I'll put this sort of template in the chat. What did I call it? Actually, I can just check here. TPO. I think it's this one. It's a study collection, so you just have to throw it in here, or data in your data folder. It'll show up here, and then load it. Yeah, I mean, like if I'm usually not getting into trades if the risk to reward is like 2. It's usually greater than that. Sure, that there have been like some sessions where like I'll feel like scalping, and I'll do it, but I don't like to do it. God, there's so many freaking questions.
I have someone asking me, are your biggest trades on options or futures?
Single biggest trades long term. That's how I got money to start trading with in the first place. Was investing
Missing.
since 2012.
What's your opinion on ICT? Since a lot of people are talking about it in the chat.
I hate the guy, but I think the concepts are fine. The thing with ICT is like, sure, a lot of those concepts were already a thing before he started talking about them. I think he made it a way to, I guess, come up with a strategy or a specific entry criteria, which I think is good to have. I really don't like the guy, but his concepts to a degree do work. Right, obviously, because like they've things that other people came up with 30, 40, 50 years ago that have worked for ages. I think you just go short as soon as you know it's not moving higher. Well, first off, you want to for shorting highs and lows, like first off, you need to identify whether it's a trending day or if it's not. Obviously, in the first time it tests a level, let's say Friday was an anomaly in which like you had that ginormous candle in like a couple minutes or a couple seconds really, but like let's say it wasn't a couple seconds and it slowly made its way up here. Like I wouldn't blame you if like you're shorting. Well, actually I would, because when you break out of an inside day high or when you're breaking out of an inside day, you never want to fade it. First off, you only want to fade it once it fails.
I have someone asking me, what's your opinion on prop firm accounts, and how can you make trading sort of a long term with live accounts?
It depends. It's only prop I use is Top Step, and when I do, I'm like more so like fucking around with them.
Mm-hmm. Where do you live?
I'm in SoCal.
You where?
SoCal, Southern California.
Oh, gotcha. Gotcha.
Yeah, I think the goal with prop firms should be to get payouts to make your own account.
Mm-hmm. How are the taxes there for prop firms?
Pretty brutal.
Yeah.
Yeah.
Can you go a little bit more in depth on that?
Yeah.
The taxes side of trading.
My tax bracket's like I'm in the 35%, so it's pretty darn high.
Mm-hmm.
Fucking ridiculous how much money I give the government each year.
Does California have a self-employment tax?
No, I don't think so.
You don't have to pay 15.25% self-employment since you're with a prop firm. It's considered like you're getting a not a partnership, but you're getting a slice of the pie, right? So it's taxed differently than if you're on a live account. Have you been on a live?
With the prop firm?
No, just like on like your own equity.
Yeah. I'm usually trading my own cash.
So you know it's different than Texas.
Well, future. Well, yeah. Obviously, you're getting a 1099.
Yeah.
With the prop firm.
Yeah. But like I was just asking you to go a little bit more depth in it, because the way futures live account and futures prop firm account. Yeah, go ahead.
Futures are taxed slightly less than equities. So it's, I forget the actual percentage, but it's like 60% is taxes long term, and like
60% long term, 40% short term.
Mm-hmm.
I was just wanting to see if you knew that.
Yeah, so it's slightly less than if you were to strictly trade equities or options.
I'm updating a notion I put out to go all over taxes. So I was just like saying you're on a live, saying you trade on prop firms. I just want to see your opinion on it, see what you knew about it. So just to clarify for anyone not understanding so far, if you're trading on your own live account, you get taxed differently than if you're trading on a prop firm account. Because on a prop firm account, it's almost like you're being employed, but at the same time, you're not. You're getting a slice of like a share of percentages, right? So if you're trading on a live account with futures, you get taxed 60% long-term capital gains tax and 40% short-term. So you pay less in tax than if you were actually working a job. So you'll roughly pay like 27% in taxes, all in all. But if you're on a prop firm, it's different. You get taxed really heavily. And let's see, Rizzo said he didn't know about a self-employment tax. But usually on top of a regular tax, you're paying 15% self-employment for Medicare and Social Security benefits if you were to retire. So it's almost like being like your own person. But the government did the 60-40 rule because they They understood how hard it was to trade, and they wanted benefits for traders, right? But prop firms are different. You're not technically trading for whatever reason. Kind of sucks. Lemon cake. I'm making a notion on it, so don't worry. It'll be up soon.
If he doesn't use Dom, how does Rizzo confirm his levels? If I'm not limiting somewhere, it's more so an intuition thing. I'm never like, especially for it's a matter of risk to reward. Like I know where the good place to. I know where I should be entering, or the area in which I should be entering. If you know that, you know. Well, let me word it this way. Fuck, it's tough. How do I word this the best way? It's like I don't want to say I know where the market's going, but based on where we're trading or what we're trading up against, based off of auction market theory, we have an idea of where price should go. Right? Obviously, it doesn't always make it there, right? But the whole basis is you trade within value, and when you're trading within value, you get rotations from the upper end to the lower end, back to the lower end, right? Until otherwise. So, I just see this as a fact. Meaning, if this is a fact, I can look to get long here as we approach the lower end, risk a tad below it, and expect it to trade back up to here, right? Or you're short. You can be looking to get short up here, and expect price to come back down to the lower end or whatever. It could be value area low. Right, or if we're leaving value, let's say in this instance, right, we're leaving value and the inside day, I can expect us to trade back to prior value, meaning, well, on NQ it's a little different because you have the big fat composite here. Right, you got that shelf at like 510. So this is like where I'd first expect maybe a potential bit of a slowdown, or most definitely these single prints, right? Once we clean that up, that's sort of where we came in and stalled a bit.
Do you reuse prior levels?
What do you mean?
I mean,
Reuse?
prior levels. Reuse the same level that you had the limit on that you traded.
I usually like limiting on the first test of a level.
Okay.
Yeah, I'll maybe do it a second time. Well, technically I am still limiting. Like if we, let's say, like knife through a level.
Yeah.
If we knife through a level and we reclaim it, like, pop back over, I'll place limits here. Right? If it tests it again, like, sure, that's where I get long again. Yeah, the confirmation part is tough. Like, I'd rather keep it simple and just say, like, okay, this is where I can manage my risk. This is where I'm gonna just trade. If I'm gonna risk 20, 30 handles here. If it doesn't work, it doesn't work. I'll wait.
Do you ever add to positions?
Yeah.
How often?
Yeah. I would say pretty often.
Do you just enter small and then wait for a pop in your direction and then add, or do you
Yeah,
do you just
or
like
I'll start with like half the position if I'm not as confident,
I see.
and then I'll add or double the position basically, which is what I did Friday. I got long after we reclaimed the inside day low, and then added once we traded back into value, like actual value.
How often do you find after you add it to a position, then it just goes against you anyways?
That's tough, right? Like I'll try to move my stop up once I add.
I see. How
But
often, how much do you wait until you add? Like, what's considered a good pop for you? Because if it only pops like 10, 20 ticks, and that's like nothing on NQ comparatively.
Yeah, it is
Like,
like
if
nothing
you
on
were to
NQ.
wait, yeah, if you were to wait like 100 tick pop, then
Yeah,
you know
then
then you're missing the move. Yeah.
Mm-hmm.
So, what do you usually find is a good balance between adding and not missing the move, and adding while like still like staying neutrally like safe?
You want to add up against or on a pullback if you're gonna add.
I see. So you don't enter a position, wait like 2 minutes for a pop, and then add. You just
No,
wait for it to
I'm
come back
usually
in.
not adding on after a pop.
Okay.
I'll let price
That
get
was my
back
question.
over a level, and then I'll add to it. I know NQ is tough, like on Friday up against these 180s here. Yeah, you got over the 160s. You couldn't get over the 180s, so I just gambled, and then you got bid up against 180,
I got you.
or up against 180 actually, because it was still below it.
Do you re-enter? Like if you get stopped out?
Yeah,
Or
as
do
long
you-
as we reclaim the level.
I got you. Someone was asking me how to find valid re-entries after a stop trade.
Yeah, you just have to wait for the reclaim.
I got you.
If you're looking at the same level, yeah.
What do you think? I saw that you tweeted like maybe like a week or two ago that you started like put hedges, leaps or whatever.
Mm-hmm.
Like with the PE, especially this high, like going into winter. I mean, I was looking for 6,400, but then like they defended that news candle kind of pumped us. But I feel like with PE, we could still be looking at like a kind of a bigger rotation lower, going into winter.
Yeah, we most definitely could. I mean, the reason I did that was this, or not, was it this one? Had an anchored view up to that October, what is that, 2023? Yeah, October 2023 low. Or was it this one? It must have been another one.
Someone was wanting me to ask you something real quick, and I'm actually curious about this question too. What is your opinion on adding options flow with order flow for like futures? You think it's like a good thing? Think it's worth a shot?
I actually have no idea. You're saying order flow on futures options and not
Limbo.
index
We
options?
got to stick to the plot here.
Oh no. I'm asking specifically like combining options with futures, but looking at futures order flow, right? But looking at options price action or different options levels.
Options on futures or index options?
I would say index options. I mean, it just like whatever correlates the most.
I think it works. I know a guy who pulls SPX data, basically like gamma, delta, or whatever those people use. And he does a decent job like plotting out high and low of day or getting darn close to it. So I think it works. I just need to figure out how he does it. Yeah, basically like Gex levels.
Yeah.
I think it works to a degree. I've used Gex service in the past. Like they didn't really work for me, but I don't know how that guy manages to do it. He's able to like filter it out and shit. But yeah, back to like shorting all-time highs or not necessarily shorting, but deleveraging long term is like, we've basically been using this VWAP anchor to the 2023 low, using a 2 and a 2.25 standard deviation, I think. Yeah, 2 and 2.5. It should be 2 and 2.25. But like we're never really able to get past, unless we're relatively close to where the anchor is. Or if it's like a roll gap, sure, we'll like breach it for a second. But like you typically don't get past the second standard deviation. So and you also got that pop after Microsoft earnings. So I deleveraged a decent bit there when we traded up there the first time. But yeah, I mean, the rest of the year is I think going to be tough. There's too much like macro starting to get involved. Like this run up down here, I don't think too much macro was involved. Like you had too many people short. You had too many people pricing in a recession, which was never the risk. But like now, you just had Jackson Hole. You have basically the Fed. I don't want to say flipping, but sort of deviating from their mandate, sort of flipping on that. So I don't know how markets are going to react to it. And just because interest rates come down doesn't mean markets go up. It's not always the case.
Do you think market makers, hedge funds, high frequency traders, stuff of that sort, do you think they look at volume profile levels?
No, but I know they look at VWAPs, like anchored VWAPs.
I see.
So, I mean, that weekly chart, where is it? It's beautiful. No?
Mhm.
So, I mean, maybe you got to pull back down into that, but yeah, this week's gonna be tough to trade. You still have a mad divergence, which is always annoying to trade.
That the NQ daily you were on with the VP, that 2300 looked like a really good, like higher time frame kind of pivot. It was the one that was like extending way more. Yeah, that one. I mean, you can
This
see
one?
the
Yeah.
and
Yeah,
maybe
this
it looked
pivot
to.
did okay.
Then
Yeah, I
again,
mean, it
like
was
when you
tough because like I thought you'd get a full traversal of this. You have these poor lows down here too. I thought we'd accepted back into value and it would sort of falter back in. But I stayed open minded and say, okay, you have your 50-day up here, you have your last anchored view up to like the most recent pop from there. Reclaimed on the daily, did it a second time, like so. Got that pop back up. Now I guess I'm looking for this to hold to keep going, or it's tough because like you look at ES and it's doing something completely different, right? Like it traded back to all-time highs basically. And Russell also made new highs. Right. Russell was actually a great trade last week. You look at the composite there. Did really, really well. Right, up against basically the bulk of that prior balance. I know it was tough. I couldn't play this with size. I had to scale out of most of my size, but I started my scales in the 70s and 60s and had to stop at like 50. But I couldn't. I took off most of the size for a loss because I couldn't fucking hold it for 20-point drawdown on this thing. Caught it on some of it. Are specific things who make for alleged shelf higher probability. The upper end of balances or upper end of, let's say, the bulk of a balance or bulk of value. I like using the term bulk of value because like it's different from, let's say, the balance high. This is where most of your value is being traded, so we'll call this a bulk of value. I prefer limit longing the upper end and using the lower end. I prefer waiting for a reclaim for approaching like the lower end. It's a little harder to nail the lower end of a balance. Sometimes like you're just left with like poor lows and weak lows. Like I'd rather not be part of that mess, and I'll wait for the reclaim. So that's, I would say, what happens most of the time is I'm limit long at the upper end of a balance and waiting if we're near the lower end of a balance. Is it rude if I ask him if he has a lot of payouts? I don't, because I don't usually trade prop. I've had a live account with Top Step twice. Basically just withdrew the balance each time. Because like they never fucking increase my daily loss limit at like fucking 4,500. Are you kidding me?
There's, I'm not sure if you know, but like, and especially in here in Discord, there's a lot of people that just trade props. I've seen people blow their whole live balance just to go back to like a 5-stack of XFA. I'm not sure if they don't understand that you can request the full balance after like 30 days. I mean, I've seen it like twice. These people like they just spam like 15 lots and blow their whole balance, which doesn't make sense to me. I mean, even if you have a small daily loss like that, I mean, you can. Like to me, it doesn't make sense to blow it. Just go back to 5 XFAs. Because eventually, I'm pretty sure they'll ban you for doing that. I mean, I would think.
Yeah, I think so. I know like they made rules so that like now you're forced into live or something. After like a certain number of payouts. It's like you can't milk it for eternity.
Yeah.
But yeah, take those payouts. Like if you're successfully getting payouts, like why not open your own account?
I mean, there's also like a million prop firms. Like if you're that mad that you moved to live on Top Step, just start, whatever 5 on my funded futures or whatever. I don't get why people blow them.
Yeah. Since when have I been trading? Been trading intraday since 2018. I've been investing since 2012. What should I focus on as a newbie? Just the basic concept of auction market theory. If you can nail this, get this idea down of price rotating from the lower end of a balance to the upper end, I think you'll be fine. And then also knowing, obviously, like, yeah, imbalances occur and you're going to leave value eventually. Right? In that case, like, yeah, this is where buyers need to defend it. Right? To either go into price discovery mode or trade up to prior balance. So I'm doing this. I take this approach with most assets, even when I'm trading equities. I take that approach.
Yo, the
Hello.
great Rizzo.
Oh my God, Galaxy, read the room.
What? What do you mean? I'm learning from Rizzo, bro. The goat.
I didn't know this server existed. But yeah, no, I take this approach with basically all asset classes. Like for example, like I was a buyer of Google on this wake down back into lower end of the shelf there. And then like you can see unfortunately I didn't buy it here, which is where I should have been long it. But the idea is still the same. Like you're sideways here within this until otherwise, right? Like you take that high and low and you get back over it. Yeah, you fail it the first couple times, but like you get back over it. Okay, now I'm limit long here. Looking, if you're trading it, if you're taking it for a trade, sure, this is your target, right? But I took it as a longer term position and then still holding bulk of the position, But and even here, like I guess you offered the first test of it back here, right? But time spent at the upper end of a balance, you're more likely to break out than not. So how do you mark shelves? Just take the big important ones. Like I usually don't care for like just a high volume node. It's a lot easier for me when I physically see a profile that, let's say, looks like this, right? Or this is the upper end here, this is the lower end. Like that's what I would have marked off. So in this example, this is what I've this is what I've marked off. Now, is there another recent example? End phase was one I got long 2-3 weeks ago up against that. It's a little more difficult to tell, but that's where most of your value is being established, and that's what I got long up against. So yeah, it's a little subjective at times, but so I'll tell you, like when profiles look like let me try to find an example. When profiles look like this composite, it's like pretty darn annoying for me to trade, right? Because there's really no clean shelf, or there's no bulk of value. Like I'd rather have a profile that looks like this. It makes life so much easier. In this case, like where was the low? Down at these like 050s, and like yeah, you can argue that like you have this is your greater overall balance, and you got one down here, another one here, another one up here, right? So though the bigger idea would be this, you still need to know that okay, you got potential for buyers to defend this and sort of like stay range bound within this.
Do you look at VIX a lot for analysis?
No.
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 Yeah, I mean it hasn't been doing much, so.
ledges are like the fall off value or fall off shelves. Or I use them interchangeably. They're the same thing to me. Shelf ledge. I just prefer shelf. Use RTH. I use RTH only. Like usually I have the prior ETH up. It's just on weekends I don't, because when I try to make a composite of, like, let's say last week, it screws it up a bit. Majority of your trades short term or swing? I don't even know. It's short term, I'd say. I completely differentiate my long term investing to my trades. Equities, I swing. I see no point in day trading them. Perhaps go into the more specifics of using VP and TPO to trade intraday and catch probable market rotation. I mean, the basic concept's just like knowing where value has been established, knowing those levels, and let's say you can't get involved at those levels or you want to wait a bit. The idea, you still have the idea down, right? Of okay, if we're leaving value, okay, this should go up. If buyers are defending this, we should go up to prior value, right? And then the most important one, at least, being up here, right? Let's say we miss this long, or you miss this the reclaim of these down here, whatever it may be, right? And you can go into this session, and I like to use the term, just wait for more MGI or market generated information, and say look at an anchored VWAP, or look at a 5-minute opening range. Why is my chart so laggy? Right, so this is your 5-minute opening range. I have it labeled IBH, IB low. That's not technically correct, right? But like, okay, now, this one's kind of tough because like you have the zone right there anyway. So like, you may as well just get involved there. Like once you get over, okay, now let's be buying the back test of the 5-minute opening range high, right? Or if anything, I wonder if this anchored VWAP did anything. A little tough. You never really traded right to it. Like that's sort of what I go off of, or other places I'd look to execute if I miss a trade, but I'm still playing the overall direction of the auction. So yeah, it's just for me, it's just a matter of of piecing all these little puzzles and auctions together, right? Like it's the big idea comes from this first off, and then I go and say, okay, you also have these levels we might want to be paying attention to, and then of course you have what's happened most recently is this breakdown, and then this inside day, and then whether we want to just watch the inside day low, inside day high, or I don't know, make this into a composite and then work off of value. And arguably you can shift this higher if you'd like, but or work off of this, like it's fine. Like but the idea should still be the same. Is you failed a breakdown in this instance, right? You have value here. You failed a breakdown overnight. You took out the inside day low. Sellers failed that imbalance lower, and like you don't need to be trying to bottom tick this thing. Like I actually thought this would break down. Like I was watching overnight. I was playing some video games and also watching the chart. You know, we were breaking down. I thought, okay, this thing's fucking toast. I get to sleep in tomorrow. Like I'm just not going to trade. Because I was looking for upside. But then like 5 minutes later, this thing reclaimed the inside day low, and that's when I said, okay, sellers are absolutely cooked. And then let me pull up the screenshot. What day was this? Friday morning, or Friday or Thursday night? What day was it? Right? Like I literally said, let the shit die the instant it broke down. Okay. And I was like, I stepped away, and then they reclaimed it. Reclaimed inside day lows. Sellers are fucking cooked. And that was sort of when I started to get long again. So, you know, there's no point. Like, I knew that you're breaking away from this. Like, I have no point being a buyer for breaking away from value and breaking the inside day low. Right? There's no point. I came into this session thinking, okay, I'm long if we stay within value, right, up against this, or you know, if sellers fail a leg lower, which is sort of one of my favorite setups is to look below and fail of inside day lows or inside day weeks, right? Because like the big quick moves happen when sellers fail or when buyers fail to get a breakout. And those moves are quick, and you typically end up traversing the opposite end.
What is that that second blue zone off of?
This one?
I think I think you merged it like that.
Yeah. I merged these two. It was also like prior sessions value area low is sort of arguably where you had your shelf, like really start to taper off. Like you could arguably see like it's like up here.
Okay.
I think it's fine either way. So, you know, like this is like sort of that perfect example. I always like work with this, like, okay, there's your perfectly balanced profile. God, I cannot draw a straight line. Okay. Right, so there's your perfectly balanced profile. This is where I'm looking at, you know, ideally, this is where you sell, this is where you long. How did we work up against those levels? Yeah, I mean, they did pretty well. Right, kept it here for the most part. So I was long up against these 190s, 180s. First time it came, I just ate a stop at 150, and then was gonna call it a night, and then I saw this thing fucking
I can't explain.
shoot back up and reclaim.
I got a feeling that I just.
Right, and then like
I
obviously
can't
main target being
wait.
this 260s, and luckily took runners into the 590s.
Someone was asking if your outlook was going to be posted on YouTube for this week.
Yeah. I do my outlook on the free side actually in my server every weekend. And then at night I'll when I'm back home I make a condensed version of it. And if you haven't, I highly suggest, like writing yourself a plan each night. I've been doing this for a while now. How far back does this go, I wonder? But basically, I come into each session with basically a plan.
I wanted to ask you,
Mhm.
are you more intuition based? And what's your opinion on having intuition on a statistical model you've back tested before?
Well, with a statistical model, you shouldn't be intervening, right?
Right. Yeah.
So I wouldn't. I've never had a statistical model. I think after enough time, and I've been around I've been watching markets basically every day for 7 years.
7 years. Wow. It's more than me.
Like every freaking session. I don't think I've missed one. Maybe a couple if I was flying, but after that much time, there are things that you just start to pick up, and regardless of like where the concepts come from, or like whether you know how to explain it or not, like you just sort of take little tidbits and sort of, I don't want to say see them as a fact, but it all goes into your intuition, I think, if you're a discretionary trader.
I see.
So that's
Yeah,
what
and I highly agree with you. If you do have a statistical model, I don't think you should intervene.
Yeah.
Especially with algorithms.
Mhm.
Never mind. I don't want to ask that.
A lot of people are asking if they can get an invite to Trader Wealth Lounge.
Yeah, sure. I don't even know the link.
It's on your tag.
Can you join through the tag?
I
No.
don't think so, no.
Yeah, I mean, I do all of my lessons and weekly outlooks on the free side, so and you'll get a ping because I do it in the spaces or whatever you call it.
What's your opinion on paying for a course, paying for a mentor, stuff like that? Paying for
I don't
levels.
think it's worth it.
I agree.
The way I got started, I saw someone using a volume profile on YouTube back in like I think it was like 2017 or 16. And then like I think it was just plotted on like a daily chart. And I was just seeing sort of the reactions you had off like high volume nodes. I think, yeah, it was just like nice pivots off of high volume nodes was what really like caught my eye. And then I was like, oh, okay, like what the heck is this? So I found out it was a volume profile, pulled it up myself, started fooling around with it. Then I read Steidelmeyer's book on auction market theory. I read the first Dalton book. Dalton approaches TPO a little differently, and he's strictly TPO for the most part. Like the concept Steidelmeyer taught was like the main like eye opener for me. Just working with value, and then sort of just using it each day, going back and saying, okay, this is where we saw this reaction, or this is sort of where we're getting some decent pivots on the day, or like this is where price is stalling out and whatnot, and then sort of figuring it out. I don't want to say figuring it out on my own, but sort of finding a way that works for me.
If you had to relearn everything you learn right now, how would you start?
I'd start with Steidelmeyer, auction market theory, and then literally go on in any kind of platform that has a volume profile and back test.
So you wouldn't recommend like a specific YouTube playlist, or you wouldn't recommend going through this server or doing this or that?
I don't know.
I see.
I've never really looked at YouTube for education, I guess.
Gotcha.
Most of
So
most of mine came from back testing and just like trading view or even on Sierra, you can go back and plot a profile and go back test, right? Sort of see like where things are.
I gotcha. So you're
Getting
just saying
to
like to get back to where you are currently, you just have to spend more time doing the same thing you've already been doing. You want to change anything?
No,
Or just no. I gotcha.
no. It's a lot easier to learn from experience and seeing it happen day to day as opposed to reading it or like seeing someone else do it.
See.
It helps you with helps you like I guess develop your own ideas.
Mm-hmm.
Yo, hello.
Hello.
Hi.
I see a lot of familiar names here. Some of you guys have messaged me in
Am
the
I familiar?
past. I don't think so.
Oh.
Nav just got up here just to get up here. He was gonna ask anything.
Yeah, I just like being up here.
Yeah, get him out of here.
Profile picture Fortnite character. No, I found this on the internet somewhere like a long time ago, and I've just kept it that.
Yeah, Rizzo, I'm curious. Can you teach us how to commit tax fraud? Any I asked earlier about taxes, but do you have any like specific things you've gone into to a Swiss bank or something?
No.
We should
No.
oh Kyle, come on.
I pay my taxes.
Oh, is it because Dom's recording? Dom, hit pause real quick. All right, let's just get this out.
I underpaid last year. I had a fat check I had to pay like a couple months ago. So I haven't been audited yet. But shell companies in the EU, no. I have one here in the States. How big's the live account? Pretty darn big. If I'm swinging more, I may have to keep margin in the account. So, I mean, that one's a tricky one because, like, even I'm still a little confused, or not confused, but like still don't know what I exactly want to do. Like, I could make a decent amount of interest, just by keeping cash in my bank account, or locking in 4.5 or 4.1, whatever it is now with a CD, or even like keeping it in long term. But the amount required in terms of margin to swing is pretty darn expensive. But I found it to be worth it. So I'm okay with keeping a decent amount of cash in the account.
What's your plan long term? That's a good question I could ask. Like, you're in day trading right now, and there's a lot of controversy around day trading, especially with anyone that's not currently in day trading. So do you plan on eventually like trying to get away from day trading, maybe putting money into mutual funds, putting money into investments, businesses outside of just day-to-day trading? Or is this what you're doing currently? And then
I
that's
do.
just like your idea for the future.
Um,
Are you doing any of that currently, or are you just planning on eventually going to invest money in the future?
No, currently. I got our family has a Italian restaurant we have here in California. So, I'm there Friday, Saturday, and Sunday nights helping out and stuff. And eventually I'm looking to maybe take over the whole thing, but yeah,
Gotcha.
some nice cash flow.
Mhm.
Obviously, like nowhere near as much like trading, but
Yeah. Is there a specific profit target you're wanting to reach? Is there a specific goal, something you had in mind?
no. I just absolutely love doing it, so I'm gonna keep doing it until
guys, I'm not addicted, okay? I'm dedicated. There's a difference. I'm
still
so
young, too.
dedicated at gambling. There's a difference. But yeah, as long as you have, I think it's important for everyone to have a future plan if they're currently making money off of day trading. And not because I don't think eventually, like, it's not going to work, but I just don't think, like, I think day to day, it changes a lot. And your mental plays a big part of it. So I think you should day trade with the goal of getting out of day trading eventually. Like, and not anytime soon, but like eventually that should be your end goal. Speaking of end goals, do you want to get into like being a quantitative analyst, working with math, economics, statistics, numbers, anything like that?
No, heck no.
No, none of that. You're just gonna run your Italian business, like you said. I got you.
How much do I make a month? I don't post it publicly. I have a couple times in the past when some folks called me out, or I called someone out. It's on my Twitter somewhere. It's better to see Dom with pending orders. No, not really. Resting orders, like, really, I don't find too much alpha in that. ICT trade is more profitable than you would be surprised. No, I wouldn't be. Review on order flow. Well, I don't really use. Well, I sort of differentiate order flow from market profiles, volume profiles. I'd say I'm more of a profile trader as opposed to an order flow trader.
I gotcha. What type of volume profile trader are you? Like, do you try and focus on making really, really high tier zones, or do you try and focus on filtering down mediocre zones through discretion or entry models? You're kind of in the middle.
Yeah, I'm always playing the big picture idea.
So like you have a bias where market's gonna go, and you just like mark times like that.
Yeah, like I'm working with the composite, but at the same time you have that the idea on the composite. Like when I say idea on the composite, I'm just thinking this, but on a much bigger time frame. Right. So
What-
so this is Mhm.
Oh, go ahead. Go ahead. I didn't realize you were
And
explaining
then-
further. Go ahead.
And then like I'm going into last week's profile or yesterday's profile or the last 2 days and then saying, okay, I can also work off of this. I can use this smaller idea
hmm
to play this bigger idea out.
So you're making theoretical predictions based on previous price action. That's what you're
Yeah.
doing. Okay. I got a question. It's like it's a little weird to ask, but like, what do you think about being able to use an individual predict overall price movements when there's so much in the market that hey, I don't even know, you might not even know. Like, there's so many factors when it comes into the market: economic
Mhm.
news, Jerome Powell, Trump, Nvidia earnings, Google earnings, Walmart earnings. High frequency traders, hedge funds, quantitative analysts that pay $500,000 a year to make models predicting the price. Like, there's so much up against swing traders, and
Mhm.
I personally don't like swing trading because I think there's way too much what's the word I'm looking for, competition in it. So what do you think about you being able to predict price action, even though like you're such a small fish compared to the massive whales in the
Yeah.
market?
I mean, it's not like I'm trying to make predictions 6 months out, right, or a year out. So that helps.
But even then, like, being in a
guess-
position more than a couple hours, I would say anything could happen. You know,
Yeah.
the
that's
longer
fair.
you're in a position, the more likely something is to happen. Jerome Powell
Mhm.
opens his mouth, Trump opens his mouth, anything is to happen, and price reacts violently to that. So my whole consistent is to stay out of long-term trades. But I'm just wanting to get your opinion on that.
Yeah, that makes sense. I mean, you're always going to have, I don't want to say black swan events, but like just events, right? That you get gnarly wicks and volatility. That's
Mhm.
unavoidable. Like, you can't, like, if you're in a position, like, yeah, you can have a stop in, but like, you just have to deal with it. You can't, there's no way to predict it. Unless, yeah, of course, like, we know when certain headlines,
Yeah.
I don't say headlines, but, data comes out. We know that.
Interesting. Because a newer mistake I see a lot of people make, especially when trading volume profile or option market theory, they try to predict the market. ICT, they try to predict the market. Even though they'll say they're trying to ride bigger fish, ride bigger whales, they're honestly just like, they have an idea in mind of what they want to see. And then when they see it, then they think price is going to do something else,
Mhm.
right? They'll wait for a low to get swept, and then we go for a higher high, for example.
Yeah.
That's predicting the market.
Mhm.
But I could see what you're saying, like trying to just get into slightly higher probability trades with a larger stop loss and just hold it longer.
Yeah. I mean, you never want to get in a trade because you think this is where it's going to go. And that, like,
Can you elaborate?
if you have, unless you have something to work up against or to be trading up against, let's say like a zone or a level where you can manage risk. Like, in the past, I've been caught like looking at like a poor low or poor high and saying, okay, price has to go here. Like, we have to go clean that up. Like, it can be days or weeks before we do that, right? So I think I think this should never be like a reason for you to get in a trade. Like, just because price has to, or you think price has to go somewhere. But if you have something you can like manage risk off of and have a reason for it, then sure.
I see.
That's why, like, there was one example, especially as a profile trader, it's like, how long ago was this? There was a day where we had an absurd amount of, or like a really, really poor low. And I just could not fathom like getting long up against it. I forget when it was. You know, but like even seeing like an insanely poor low, I remember like saying like, oh, holy fuck, this is so disgusting. Like we've revisited this low 5 times today. We haven't broken it. But then like we ended the session much higher. And I'm just stuck staying flat, right? So yeah, there are instances in which like I get kind of caught up in, I don't want to say predicting, but you know, thinking a market has to go somewhere, but it doesn't.
How much do you think like market movements are determined by like MMs and like algorithmic, apart from like obviously retail is like whatever, like very small amount, but
Mhm.
do you think it's more like algos or like the MMs and like the hedges moving price?
I think most of it's that. You know, I think it's, I don't think it's useful like trying to figure out exactly why the market moves.
Yeah.
Like, you know, I don't think anyone really knows. It's just I've been able to sort of, I found a model or theory as to why things move the way they do. But it, you know, it's probably not the sole reason as to why we move like this, but I found it to be, for it to make sense enough for me to be able to write a narrative and have a story that I can work with. So, you know, who knows if it's, I definitely know it's not the only reason markets move the way they do, but it's so far, it's like the only thing that's made the most sense to me. You know, like you know, you have a market with buyers and sellers. If you think about any other market with buyers and sellers, you know, like you're gonna get a distribution as to where a buyer or seller of that product is willing to get involved. Right? Like if we take an example of, let's say, apples, right? You got sellers of apples and buyers of apples. You know, let's say $5, $10, right? People are willing to do business here. The lower you go, yeah, buyers would be willing to get involved, but there's going to be absolutely no sellers willing to, you know, you're not going to have sellers willing to sell at $4, $3, $2, unless something changes and let's say a new report comes out telling us apples are bad for your health, and sure, this distribution might move down here. Yeah, that's sort of that sort of one of the changes that could move asset prices is a change in valuation, right? Let's say like apples extend your life by 15 years. Okay, now there's going to be a premium to apples. Now this distribution is going to move up here. So that's sort of how I view it. And or to go over why you're a perma bull and typically only long, it helps me avoid flip flopping. And hence I'm like only looking for a couple setups going into the day. Like, yeah, you might miss the big move. Like, who gives a fuck?
I mean, historically, it's a good mindset
Yeah,
to have.
yeah. If you're gonna play one side, play the upside.
Yeah.
As long as it's not meme coins or fucking, I don't know, small caps. Fucking bullshit ass. Yeah, I don't touch small caps or like, let alone mid caps. I barely touch them. I'm usually in the megas and yeah, things that have gone past that have gone through the business cycle once or twice. I trade futures, ES, NQ, Russell, crude occasionally. Copper, rarely. Gold, rarely. Equity. YM, no, I don't. It's for
Do
people in retirement.
you trade the NDX options a lot, or just like when you see some of them really nice?
SPX and NDX options, I'll only play 0DTs.
Yeah.
Yeah, if I think a setup's there, like, no, I'll take it.
Yeah, the
I
NDX
traded-
options are crazy. Those things
Yeah,
are
they
pricey.
are. It's hard to get a fill sometimes. That's like the most annoying part.
Do they move nice though? Like SPX on steroids, I assume.
Yeah, it is.
Yeah.
We traded Japan stocks. Funny you say that. I have pretty decent holding over in Japan. I don't trade them. It's long term. Yeah, I was discussing buying real estate over there. It's like getting really, really cheap. But I need to go over there. I still have a custodial account. And they need my physical presence there for me to fucking withdraw. Haven't been there in like 10 years. But yeah, I'm Japanese, part Japanese. Futures your main focus. Day to day, yeah. I have more cash in my long term. So, that's sort of where most of my money goes. I think cracking correlations. It's really annoying to trade. Like really, really annoying to trade intraday with massive divergences. Like a slight one's okay. Like I was really getting pissed off. Well, not really. There was one trade that really ticked me off on, I think, Tuesday when we sold off, when we started the sell-off. Thankfully, I was trading NQs and was short that as opposed to ES, which made a freaking high of day. And you took out prior day's high on this divergence. You made a pretty significant new high as opposed to NQ, which faded. But even then, like, I was short pre-market up against these 760s and 750s. And like this pop-up after you got the first sell, I had my stop at the halfback of the opening range, or the 5-minute opening range. And then the fucking top ticked me at like 7:30. Yeah, divergence are really hard to, like, going into this week. There's still a massive divergence, right? Like NQ is still between this distribution up here that we left 2 weeks back, right? And ES is back in it, basically back above it almost. So, like if I'm strictly looking at, that's also the hard part, is like ideally we trade down to sort of the similar levels, right? But like right now you're at completely different places. And like if I'm strictly looking at ES's profile, like I'd be okay with getting long up against the 60s here. Granted, it is a bit of I don't want to say it's a slightly weak, so you got a test of it here on Friday. I'd be okay with ES bouncing off of any, let's say halfback of this session or whatever it might be, anywhere. Or let's say you take out some of these lows we saw Friday. I'm not gonna be limit long here or at any of these levels really, but I'd be very okay with it reclaiming the 60s. In fact, that's probably what I'm gonna look for this week, at least to start the week, or a reclaim of 80. Right. To see it higher. It's just the problem with trailing too low. It's like, this is also where it helps, right? As if I'm only playing one side, is I'm only looking for a reclaim of these lows at 60. Right? Like if I'm looking to play both directions, like you could get caught shorting up against 80, which is fine. Or I don't know if you want to short a break of these lows that we saw Friday. Right, you got a poor low there, somewhat weak level there because you already tested it. Like if you're looking to play both sides, you're caught with, okay, should I be short up against 80? What should I be short down to? It's like if we break 60, the target would be this, ideally, these 30s, but I wouldn't be surprised if we bid off of halfback and reclaim this. So it just helps me avoid thinking too much and really just waiting for like one or two setups. And I'm just gonna look to get the long up against 60. Just make it easy. It's just, but looking at it on NQ, it's a little tougher, right? Because going into the the bigger picture idea was this like 500 is like the upper end of the shelf here on the composite, which we held on that pullback Friday. But you go any lower than that, and sure, you have a session low, a session high. You got this value here, inside day high there. You have the singles that go down there, like, which you could get a reaction off of. I'm not saying you won't. We can. It's just I don't like the idea of trading below 510, just on the bigger time frame. So, there's no reason for me to be, let's say, long up against any of these levels, looking for this, right? I can look for a trade back up to, let's say, like, Friday's upper distribution or this 500s again, sure. You can be long for scalper or back up to a level. I'm not quite interested in such a tiny move. Like, I'm not saying this can't go, it can, but I'd be okay with waiting till we reclaim this 500s to then get long, and I can, set my eyes a little higher to like 750 at least, or like this 810s. So, I hope you like. There's so many little nuances of like, I guess like taking out prior lows and like sort of seeing what we do there. And I think it just comes from experience, just being around markets all day. But that's just sort of my thoughts going into the week. If we're back below this, makes it a little tough for me to be long, because like the bigger overarching idea is this, right? But then like you see it on ES, and like it's like you trade it back into private value. They look like completely different charts right now. It always makes it tough. And you got the Russell breaking out. It's fucking crazy. $65.01's last line of defense for sellers. I'd say this like 90 to 95. Like if buyers establish, if we get a break above and you can't trade back below this, or if we establish value above this, it looks pretty darn good. Go get those extension targets. Would you trade during the huge sell-off when ES and NQ were dumping? It depends. Like sometimes I very rarely short. It's just this week I happen to be short. On NQ on the Tuesday. I didn't short Wednesday. I was just patient for a dip buy. I ate a stop here up against 300. Pretty sizable stop. I was limit long there. But I think I discussed in my last Outlook, or did I post the last Outlook or last week's? I think I did. I think discussed if we do sell, right? You have the the moving averages on the daily here. You have the anchored VWAPs there, right? But I think I'd try to make it clear that like I'd be okay with being a little more patient and waiting for, you know, a reclaim of some kind of level before trying to get involved. But like if we are like downtrending and like you and you're still playing long, you have to know where you are on the chart, where we can possibly trade down to. Okay, why are you taking this long? And if you are taking this long, you need to understand that you're fading this and be quick to take profits if you do choose to get long. Move your stops up, you know, pretty quickly. You don't want to be in a situation where like you're downtrending and you're taking like 5 stops in a row. Yeah, I mean, eventually, yeah, you're gonna bottom, but like, there's no point in, you know, taking 5 cuts, trying to find that bottom. I think it's better you wait for some kind of confirmation, or some kind of, or a little bit of, just give it a little bit of time for excess to form. Take out a level. I think this deal is a good example, right? Of this low to form here, trade back into the IB, or sorry, A period range, and then, you know, try to get long there, or, you know, reclaim of like the 140s, 160s. What about during Feb, like April? I was still playing longs for the most part, but I was pretty quick with taking profits and moving my stops up. How much points on average do you go for? I don't know. Yeah, if I had to put an RR to it, it's like at least 3. My stops are typically 20 to 30 points on NQ. Do I only limit or market order? I do both. I prefer the limit because I'd rather not have to think or react to things.
You don't really care about like a higher time frame VPOC, do you? Seems like you're just straight market profile.
Yeah, no, I don't really care for it. I mean, yeah, if the point of control shifts to, let's say, the high day or like on the composite, like this, you know, unless we're above that distribution, I'm not initiating longs. Like,
Yeah.
explain what you mark on your VP. Shelves, edges of balances. I prefer using the term bulk of value, or most of your values being established, or most of your volumes being traded. I like to mark off like the edges of those. Where you learn from the concepts from Steidelmeier, and basically back testing. So we just found my own way to trade it. I don't want to take credit for like discovering it, but like, you know, I've sort of tried to make a way that works for me. God, I have like 20 freaking friend requests.
I had to send you a DM about something.
How do I do that? I don't know. I'll figure out how to fix that. Mr. Bit, did you ever talk about risk management? No, it's the levels. Like that's where I manage my risk. Like we're all guessing, right? When we're trading. It's just, is it what is your guess based off of? Is it I always have a tough time like putting this into words. Yeah, calculated edged gambling. That's a good way to put it. Oh no, someone's calling me. These fucking idiots.
Well, I mean, I think we can kind of wrap it up. I think, unless you got anything else.
No, not really. Oh, we got a couple Italians in here. I'm Sicilian.
I mean, Harame, he's been talking for like almost an hour, 2 hours, you know? That's busy. I mean, the chat doesn't really have any other questions I'm seeing. Kind of just yap. So.
Yeah, I got probably, I was supposed to do an Outlook in my server a little while ago, but
Got caught up.
yeah, I'll put out my daily Outlook. Yes, I am Sicilian. You looking at cumulative volume delta? No, not really. No, not at all. Oh my gosh, fucking Jasmine's losing it because there's like fucking 50 of you trying to join this server. All right, well, I'm gonna wrap it up. If you have any questions, I feel like a decent amount of questions got answered, but you know, if not, just ping me in the chat. I'll try to get to them. Yeah, we'll go from there. So hopefully you'll have a great rest of your day, and I'll catch you all another time.
Take it easy, Rizzo. Thanks for.
See ya.